Welcome back. Some more recovery in the Nifty, up around 35 points, of course, courtesy Reliance. That stock has moved to the highs of the day, and some other names as well, which are making the highs. BPCL, for instance, has moved higher. We also have some other stocks, the likes of Kotak Mahindra Bank and Bajaj Auto. Titan 2 has moved higher, and all this is contributing to gains on the Nifty that we are seeing right now. But we'll talk about special segment inside Edge. Today, we are focusing on the D Street debutant Elin Electronics. Stock witnessed a subdued listing today and has dipped in trade after the listing as well, down around 6% odd. Vahista joins us to tell us more on this.
Well, Elin Electronics, like you mentioned, has had a weak listing on the markets today. In fact, it lists at 244 rupees per share, which is to be compared with an issue price of 247. The stock, like you mentioned, is down by about 6% right now. Let me brief a little bit about the company. It's an electronic system design and manufacturing services company for major brands of lighting, fans, kitchen appliances in India, which includes the likes of Philips, of Panasonic, Usha, Havells, Bosch, and many more. Now, the key business verticals include the fractional horsepower motors. It also has ventured into the medical diagnostic cartridges space, and the company serves under the ODM as well as the OEM business model. Now, post IPO, the promoter and the promoter group shareholding has fallen to 32.93%, which is to be compared with 53.98%, which is before the IPO. The post-issue market cap comes to approximately 1,200 crores, and the IPO issue proceeds are going to be utilized for payment of debt, for funding their capex at their Ghaziabad and their Goa plant. Now, in terms of peer comparison, the players like Dixon Technologies and Amber Enterprises, though, have higher revenues than Elin Electronics. But Elin Electronics in FY22 had clocked revenues of approximately 1,100 crores with margins in the range of 7–7.5%. We hosted the management on our channel today morning, and they had said that they expect to clock 1,800 to 2,000 crores of revenue within the next 3 years. Now, if this is to be achieved, the company needs to grow at a per annum rate of 22% for the next 3 years, which is to be compared with 27% growth which they clocked in FY22 on a year-on-year basis, and 10% growth was clocked in FY21. Of course, FY21 was a COVID year, so there was a lull over there. Also, the company plans to gain more business from the e-retail segment, especially in the small appliances business, and they plan to expand their BLDC electric vehicle motors business, which is an extension of their existing business. Also, the backward integration has helped the company to deliver better margins than its peers. Like I mentioned, the EBITDA margins have been in the range of 7–7.5%, and the company is confident of maintaining the same margin band, or is even optimistic of improving it further. So all in all, a robust business model with attractive valuations, but the market has not given it. I mean, it's been listed at a weak valuations right now. Back to you.
Right, Vahista, thanks a lot for that. 6% lower on Elin Electronics. We also spoke with Sanjeev Setia, who's the director of the company. Let's listen into what he had to say.
In our small appliance division, we intend to increase our sale of mixer grinders, irons, and we want to tap the e-retail business in this category because that's again another fast-growing category. Personal trimmers is another division where we want to expand, and we have very healthy orders. Motors is a major business vertical for us, so we are looking at BLDC motors, especially for the two-wheelers and three-wheeler category. That's a fast-growing category. Right now, a lot of motors are being imported, and since we are already in BLDC in ceiling fans and mixer grinders, that's a natural extension for us because the technology is already with us. So that's the EV space which we want to come out in.
That's about Elin Electronics. Let's talk about a stock which is buzzing on the back of a positive brokerage note. We have Go Fashion, as Equirus has initiated coverage on the stock. Surbhi joins in with the details. Surbhi.
Hi, thanks for that.
All right,
I think we cannot hear you, Surbhi, so we'll come back to you. Well, for the markets, yes, there's some more recovery for now. Go Fashions, but is a stock which is doing well in trade today. Equirus talks about a potential upside of 27% on the stock as well, and they like the margin profile as well, which they're expecting to increase. Of course, we'll get in Surbhi to get more details on this one. The stock higher by 1.2%. It has, though, come off from the highs as well.
You know, we were talking about the way Reliance has moved, and by virtue of its weight, it can take the Nifty higher, etc. The Nifty is up by 40 points now, and the Nifty Bank too has recovered from the lows. The Nifty Bank is now sitting with a cut of just about 60 odd points. You know, moments ago it was down by over 100 points, so 50–60 point recovery from the Nifty Bank coming in. And Reliance moving to the high point of the day has aided the Nifty, which is back at the 50-day moving average for the Nifty index, that is. It has been a mark which has eluded us for a while. Today we opened above that and then have been below that. So let's see where we go from here.
Okay, yes, we will. So for now, at least, we'll go to a break. On the other side, Manisha Gupta will join in with Narinder Wadhwa, who's the President, Commodity Participants Association of India. Stay tuned.